not be able to present.
I think I got a message from this thing.
Yes.
Yes,
Okay, so good afternoon, everyone. We are Group 2 and we are going to discuss about input tax credit today. So let's begin. So, input tax credit is a regime under GST which allows the registered businesses to claim credit for the GST they pay on purchases of goods and services used for business purposes. So, this is the definition, and uh, this particularly input tax credit can be used to offset their GST liability on their output supplies. So we heard some of the keywords here. Let's understand it with an example. So a bakery, let's take an example of a bakery which is registered under GST, and it purchased flour worth of 5,000 rupees, included in 18% GST, and then they sold a bread making using that flour of 10,000 rupees, including 18% GST. So now we have two numbers here, 5,000 and 10,000. So 5,000 will be our inward supply, the supply for the bakery, and 10,000 will be the outward supply on which we can offset the GST. Then comes the tax liability on both of them. We have paid 18% GST on 5,000 inward supply, which is 900, and the total GST we have collected on the sales is uh, 10,000, 18% on 10,000, which is 1,800. So now we have two types of two taxes. One is 900 and another one is 1,800, which 900 is our input tax, which is our main concept, and 1,800 is our outward tax. So ITC, what ITC allows us is that we can offset this 900 from our total tax liability to reduce our final GST burden. So our final GST payable will be 1,800 minus 900, which leaves us with 900, and we'll pay this tax. So basically, we'll get the 900 back, and our GST burden will be reduced. This also gives us a few benefits. So, first benefit is reduced tax burden. So, we understood that the concept suggests that we reduce our overall tax liability with our input tax credit, and we avail that, and ultimately it reduces our tax burden. Another benefit of ITC is transparency. So while claiming ITC, we have to have the valid invoices for our business transactions, uh, which promotes transparency within the businesses and the government also. Lastly, our cash flows also improve because we retain more working capital since we are able to get our input credit and offset it ultimately. So, in conclusion, the whole concept suggests that ITC, input tax credit, is a vital role in GST system, which allows businesses to claim credit for the GST they had paid on their purchases. And it helps reduce the tax burden, promotes transparency, and improves cash flow, like in the case we saw in the bakery. So there are a few eligibility criteria, conditions, and documentations, and a few regulations which have to be taken care of. So we covered that now. And the eligibility is that a person who is registered taxable person under GST Act, who is paying tax due in the course of furtherance of business, can claim and avail ITC credit on credited in electronic ledger. So this person who is a registered taxable person is eligible. A person who is working under the composition scheme is not eligible to avail the ITC. Secondly, a person who is non-resident taxable person uh, uh, on the receipt of goods and services, except on the goods imported by him. So basically, if a person is non-resident, he cannot avail ITC. Then there are few conditions for claiming the ITC under Section 16. First one is that the goods we have purchased are being used or are intended to be used in the course of or in the course or in the furtherance of the business. So basically, ITC can be claimed not on ITC cannot be claimed on the final product. It can be claimed on the raw material, on the or on the goods that are to be processed further and to be sold. Secondly, the person should have the tax paying documents with them, the debit note, the bill of entry, and all of that. We'll cover the documents later, but the registered person should have those documents with them to claim the ITC. Third, the person should have the receipt of the goods and services he or she has received on the behalf of the business. Next, the tax should be the tax should be actually paid to the government. So basically, if your supplier, the person from which you bought the flour, should have paid the tax before, and then only you can avail those input tax credit. After that person has paid that tax, we cannot ask the government to give the credit before the person has paid the suppliers has paid the tax. Secondly, the next condition is the goods received in lots or installments. If the goods are being received in lots or installments, for example, if the flour we ordered from a supplier, he gave it in 3 installments. So whenever we get the last installment with us, then only we can claim the ITC. Lastly, furnishing of return. ITC cannot be claimed after the due date of filing the return for the September month for next financial year. So basically, the person who wants to avail the ITC, their returns has to be filed on the due date and claimed. After that, only they can claim the ITC. Then we have the person has to have certain documents for to claim the ITC. First one is, as I already mentioned, invoice issued by the supplier of goods or services, the debit note issued by the supplier, the bill of entry, an invoice issued under certain circumstances, like the bill of supply issued instead of invoice if the amount is less than 200. So basically, if the amount is less than 200 and the invoice is not there, so bill of supply should be there. An invoice is very important to claim the ITC. Then an invoice or credit note issued by the input service distributor as per the invoice rule under GST, and the bill of supply.
Okay, just hold on, Surasha. Just go back. So two things
Yes.
basically. You said input service distributors. Who are these
Hmm.
people? Can you give me an example?
Sir, I read this concept under so basically the goods are being ITC is being claimed on the goods, I think so. I'm not able to recall. There was a term. I'm not able to recall that.
Input service distributors. Invoice or credit note issued by the input service distributor. Now it's a concept like here, suppose there is a head office, okay,
Mm-hmm.
and it is doing all the advertisement is done through the head office itself for the for the entire company, okay.
Huh.
So advertisement is
Head
something
office and branch office concept was there that.
so they have to pass
Uh,
on this GST what they have paid, because
mhm,
the units, the branches who are selling the product, they would be entitled for claiming of the input credit, okay. So they need to
mhm,
pass on this, or whatever input credit they have paid on the advertisement will be passed
mhm,
on by the head office to the to the units by raising an invoice, okay. अगर आपका
okay.
head office है, they have spent say 1 crore rupees on advertisement on TV or whatever, okay. Now on
Mhm,
1 crore they have paid say 18 lakhs of GST, okay. So now that 18 lakhs is an input credit available to the head office, but they are not selling anything. Who is selling?
mhm.
Their branches, their
The branch.
the regions, or their branches who are selling the product. So that means the head office is going to raise an invoice on all
Mhm,
the branches across India or the globe, or India particularly, and
mhm,
those invoices will become the kind of invoices on which the input credit can be claimed. So that head office will pass on all the credit to transfer all the credit to the branches who can claim these through a mechanism of raising an invoice on the branch. Okay,
Okay, sir. Okay.
ठीक है, चलो कोई बात नहीं. अच्छा ये बताओ बिल ऑफ एंट्री क्या होता है?
Bill of entry. Um,
Bill of entry is
In
कोई बात नहीं. Anyway, this is bill of entry is something which is
Bill of entry
जो
is
importers
related to
वगैरह के लिए customs
हाँ.
मतलब
So when you
custom वाले से related कुछ याद आ रहा है मेरे को.
yeah. So somebody else to say, Kajal, you wanted to say something?
No.
Okay, the same thing.
I,
Okay.
no, sir. I thought that Suraksha is not answering, so I was just telling
So bill
the
of entry
same
is very
thing.
simple. Whenever you import some goods from outside, okay,
So that
fine.
will
So when their goods land up in Mumbai port or maybe any other port in India, so the company who has imported goods, they have to file a bill of entry. Their
हाँ.
CHAs, that means their agents who are going to clear the goods from the dock or from the port. So they file a bill of entry with the custom authorities. Okay, giving
So
all the
custom.
details about all the goods which have imported. Okay, and they are going to mention about what is the rate of duty which will be applicable on those kinds of goods. And basically it's a duty paying document. Okay, and telling the custom authorities that these are the goods we have imported from abroad, and these are the goods, and these are the goods. How much import duty you are supposed to pay on those goods. You mentioned that. Okay, now custom authorities will check the tariffs and find whether if you have, properly filed the bill of entry, they will ask you to pay the amount. Otherwise, they are going to make some changes. They're going to ask you pay more because according to them, the goods which you have declared are not, they don't attract 10%, but they attract 20% custom duty, for example. Okay, so they can change the classification. So it's a very, very important document. The most important document, in my time when I've been working in companies. Okay, so the bill of entry is a wonderful document. So you must read something more about it. So I understand that you don't know because you haven't dealt it clearly in your life. So, but you should just go and research on this. This is a very, very important document, and whatever amount you're going to pay, as a custom duty. Of course, on custom duty you're not eligible for GST, but on IGST, which you're going to pay, so you're going to also pay IGST also along with the custom duty. So IGST portion will be on that. The ITC is available to you, input credit tax credit. Okay.
Okay. I just remembered that it is related to customs or imports. I didn't know the details of
कोई
it.
बात नहीं. It's a because I have during my life I've worked with various companies, and it was it has created a lot of kind of issues and a lot of uh, tensions in my life, because we were not able to get the bill of entry, and because the bill of entry is a very important document for claiming so many things, for paying custom duties, and if you don't have, you are not eligible for input credits, and sometimes you will get some notices from the custom authorities. So it used to give you a lot of sleepless nights, and some important cases which happened in the courts also, like Mumbai High Court. So we had to file a bill of entry. So I had a very great kind of information about bill of. Anyway, chalo, go ahead, please.
So the coming slides.
So talking about the items with restricted ITC, usually input tax credit is available on almost all kinds of inward supply, but a negative list of few items is given by section 17(5). This list includes motor vehicles and other conveyances except when they are used for further supply transportation of passengers, provide training or transportation of goods. Food and beverages, outdoor catering, beauty treatment, health services, cosmetics, and plastic surgery, except when they are used for making an outward taxable supply of the same category or as an element of taxable composite or mixed supply. ITC is also restricted with membership of a club, health, and fitness center.
Suppose, Manu, if I ask you a question, suppose you are working a company, okay, fine, and
Yes.
you are provided with a club membership, okay, fine. Suppose you are provided with a club membership because you are working in an organization, so you can go and enjoy the club facilities. Now, the club membership which is given to you cost a company about 2 lakh rupees, on which the company has paid, say, 36,000 rupees of GST. Will the company be eligible for that GST credit as an input credit or not? Yes or no?
No, sir.
So just go back and tell me under which, where you have mentioned about that.
Sir, I think like seen
Yeah.
that
Membership of a
travel
club.
benefits.
Yeah. membership of a club, health and fitness center. Okay, suppose now companies offer you a lot of perks when you join them. Okay, they give you a membership of a club. They can give you a membership of a health center or a fitness center, a gym center and all, so you can go and use those services. So when the company raises, they get the invoice from the supplier, so it may carry a GST. For that, company cannot claim any GST input credit. Okay, go ahead, please.
Yes, sir. Rent a cab, life insurance, and health insurance are also restricted with ITC, except when they are mandatory for an employer to provide. Uh, Travel benefits that are extended to employees on vacation or home travel concessions, work contract services when supplied for construction of an immovable property, except when it is an input service for further supply of work
Okay,
contract
just one
service.
more thing now. Suppose you are working in a company, okay, and
Yes, sir.
company has taken a health insurance for all the
Hmm.
employees of the company, and they're paying 1 crore rupees premium for the entire company. It's a big company, okay, and having say 5,000 employees or thereabout, and they covered all the employees under a mediclaim policy. Suppose anything happens to you or your family, and somebody is hospitalized or something happens, then you can of course claim all those expenses against those insurance policies. So company has paid 1 crore rupees insurance policy on which they have paid say 10 crore rupees GST. So will the company will be
Yes.
eligible for GST input credit for that?
Sir, it depends. If it is mandatory under law, then they can claim. But if they are providing out of by themselves, then they cannot claim ITC.
Absolutely, your answer is correct because normally insurance policy which the company takes, it is not mandatory. Okay, fine on the part of the company to take an insurance cover for the employees, unless if they are by the Factories Act or some industrial act, it is required for factories and all the workers. Then only it will get covered. Okay, go ahead, please.
Yes, sir. Uh, Next slide, Suraksha. Uh, Other things that ITC is restricted with is goods or services received by a taxable person for construction of an immovable property on their own account. Goods or services on which tax has been paid under a composition scheme. Goods or services used for personal consumption. Goods lost, stolen, destroyed, written off, or disposed of by any way of gift or free samples. Any tax paid due to short payment, excessive refund, fraud, suppression, misdeclaration, or confiscation. Goods or services used for making exempt supplies.
Okay, now here I'll like
Next
to
slide.
ask you one question. Just go back. Now, what is a composition scheme? I mean, you have any idea, Manu?
Yes, sir.
कुछ idea है? Who are the
Uh,
people who are eligible for composition scheme?
Sir, it is available to small taxpayers like who have a turnover less than 75 lakh.
Sir, can I answer this?
Yeah, please.
Okay.
So whose turnover is more than 1.5 crore, they can opt for composite scheme. But
More
they
More
have
or less than? More than or less than?
up to
Less
less
up
than.
than,
to
less
up
than.
to 1.5 crore.
Ah,
Older limit was 75 lakhs. Now it is
Yes, sir.
1.5 crore.
1.5 crore. And they have to pay fixed tax on that.
Okay, good. ठीक है. Manu was also right, but he was talking about the older limit. But now the limit has been brought up to 1.5 crores. Okay. So you said goods or services on which tax has been paid under the composition scheme. Okay.
Yes, sir.
ठीक है. आगे चलिए.
Next slide. So next, moving on to how to claim ITC. So a person who want to claim ITC has to file a monthly return in form GSTR 3B, which is a summary form to declare your output tax liability and input tax details. They have to verify the input tax details from GSTR 2B, which is auto-populated statement based on returns filed from supplier. They have to reconcile any discrepancies between the claimed input tax credit and the form GSTR 2B that was auto-populated by the supplier. And then ensure that you pay any excess input tax credit claimed along with interest and penalty if applicable.
Okay.
Next slide. ITC reconciliation is basically matching the details specified by his supplier in his GST return. So sometimes there are certain blocked items and which can, or sometimes the supplier doesn't file a GSTR1, which can cause some discrepancies. So they should be reconciled accordingly.
Okay.
This is an example of claiming ITC. So let's say Mr. A sells goods to Mr. B. Mr. A will file their GSTR1 for selling their goods. The GSTR1 that Mr. A files will get auto-populated in Mr. B's electronic credit register, and that amount of GST can be claimed by Mr. B for output tax to get refund on their output tax liability.
Okay. Good.
Tenure to avail ITC. ITC has to be taken till due date of the return for the month of, I think it should be November 30.
Yeah.
Okay, I'll change it.
कोई बात नहीं, बाद में change कर देना. To due date of the return for the month of for the next financial.
November 30. Yes. Next. Registered person can avail ITC only up to 1 year from the date of issue of tax invoice and up to 5 years in case of capital goods. So how can a person utilize their ITC? So if a person wants to pay their IGST, they can use their input tax credit form that they got from inward supply of IGST, CGST, and SGST. If they want to pay their CGST liability, they can use the ITC available from CGST and IGST. And if they want to pay SGST, they can avail the ITC from SGST and IGST. But IGST always have to always after completion of IGST they can pay SGST and CGST.
Okay.
Also, one thing we can remember is that CGST and SGST cannot be used to pay each other.
Okay. Good.
Now Kajal will take over.
Okay, Kajal.
So moving ahead, we'll talk about the additional considerations for ITC. Under certain special circumstances, we are allowed to claim ITC. Number one is fresh registration. A fresh registration where a person becomes liable to pay to claim for the ITC or for becomes liable for GST can claim for ITC within 30 days from the date on which he becomes liable for registration. Second is when a person voluntarily applied for registration shall be entitled to take credit of. Third is registered person switching from composition scheme to normal tax payment can also claim for ITC. A registered person whose exempt supplies becomes taxable supplies shall be entitled to take credit of. Also, where there is a change in the constitution of a registered person on account of sale, for example, say there is a merger, demerger, or amalgamation, lease or transfer of the business with this specific provision for transfer of liability, the said registered person shall be allowed to transfer the input tax credits which remains unutilized in his electronic credit ledger. Second, transfer of ITC on obtaining separate registration for multiple places within a state or union territory also comes under the consideration of Section 18. When a person who has availed ITC opts for composition scheme, he is not liable to get ITC. Supply of capital goods on which ITC has been taken. So these are the special circumstances covered under Section 18. Moving ahead. Moving ahead, we'll talk about how the claiming of ITC on capital goods is taken care of. So, in case when the good is only for personal use, there is no ITC available for it. Say a person X has purchased a fridge. Since this is not required for a business, so this is only for a personal use. She will not be liable to claim for any ITC on the GST paid for the fridge. Secondly, say a person has purchased a small flour mill in his grocery stock to grind wheat grains to flour. Since this item is exempted under the GST, he will not be able to claim ITC for the purchase of the uh, grinding floor grinding mill which he has purchased. So this under this both circumstances, no ITC is available. Second is only normal taxable sales. Under the normal taxable sales, the income tax available. Third is partly for personal or exempted and partly for nominal sales. So in that case, when a good is purchased, which is used partly for personal use and partly for the use of business, in that case, only the proportionate amount of ITC is available for people uh, to claim on as the income tax credit.
Income tax. No, just hold
Moving
on.
ahead,
Kajal, just hold on. So
sorry,
the last
input
thing.
tax credit.
No, last one was,
Yes, sir.
can you just tell me, suppose there is a company, which is selling two types of
Hmm.
products. One is, exempted from the GST, and another is,
Hmm.
attracting GST. Okay. Suppose it is,
Hmm.
50-50. 50% they are selling is, exempt from GST. 50% it is, it
Hmm.
is, I mean, you have to pay GST on that product, final product. Now it
Hmm.
is purchasing, suppose,
Hmm.
for example, it is purchasing some input, okay, and they are paying,
Hmm.
like some 10,000 rupees as input credit on that. So will they be eligible for
Okay.
entire 10,000 rupees input credit, or will they be eligible? I mean, how they will claim that?
Only they will eligible for only the attributable amount.
50%.
Whatever is,
Yeah.
yeah,
Because
whatever
50% of
is
the sale is,
exempted.
exempt, 50% is not. So how much input credit they can claim if they are paying 10,000 rupees, say, of GST? Just, I mean, a ballpark, I mean, of course, without
So
going
they will
into,
take the value of the exempt supplies and they
Hmm,
will divide it by the total turnover,
yeah,
and then they will be able to get what is the proportionate amount which is attributable to the exempt supplies. That
yeah,
amount will be deducted and other can be claimed for the input
absolutely,
tax
absolutely.
credit.
So that is a absolute, I mean, a perfect reply. So that is, what we do basically for companies who have some exempted, goods, and some portion of their turnover is, taxable. So we calculate what is the percentage which is exempt and how much is the percentage which is, taxable. So only that percentage which is, taxable will, the input credit, that proportion will be allowed only. Okay, so fine.
Mhm.
Go ahead.
Moving on to the next slide. So, what are the recent updates on ITC claiming? There are certain changes which have been made as per the budget 2023. So, Section 16 is amended to state that buyers who fail to pay their supplier the invoice value, including the GST amount, within 180 days from the date of issue of the invoice, must pay an amount equal to the ITC claim along with interest under Section 50.
So can you just explain
Number
in a
second,
layman language? What does it mean?
so, so if a person, so under section 16, what happens is that you will have to provide whatever supplier invoices. So we will need to provide them the invoice. But if the invoice is not provided within 180 days,
No, no, just
then
hold
the
on,
amount
Kajal.
doesn't.
Kajal, you're just, making something wrong. So you have to make to your supplier, you can take the input credit only once you have paid the money to
Hmm,
your supplier. If you haven't, you have got
hmm,
a bill of say 1 lakh rupees, okay, and say another 18,000 rupees GST. So that means you 1 lakh 18,000 is due to your supplier, okay. But if you haven't not
hmm,
paid that money to the supplier, you will not be eligible for input credit. So the time limit is that you have to pay
huh,
within 180 days. If you don't pay within 180 days,
hmm,
you lose the input credit. So
hmm.
if you just read it again,
Okay.
Section 16 is amended to state that the
Huh.
buyers who fail to pay their suppliers the
Hmm,
invoice value, including GST amount, within 180 days from the date of issue of the invoice must pay an amount equal to ITC claimed along with interest under Section 50. So because they have already claimed that
hmm,
input credit, when they file the return, so they have to pay the entire amount back to the government or reverse their input credit,
hmm.
and they have to pay some interest
With the
also.
interest.
So is it clear now what is it mean?
Hmm.
Okay, just read it
Yes.
Yes, sir.
yourself
Yes, sir.
again just to understand. एक बार
Okay.
दोबारा पढ़ो.
Section 16 is amended to state that buyers who fail to pay their supplier the invoice value, including the GST amount, within 180 days from the date of issue of the invoice, must pay an amount equal to the ITC claimed along with interest under Section 50.
Is that clear now?
Yes, sir.
Yes, sir.
Okay, so if you please ask me questions, so no, don't worry about it. Okay, go ahead. Second one.
So second one is section 17.5 is revised to include another item under ineligible ITC being expenditure on CSR initiative for corporates.
Okay.
Number third is high C sales and similar transactions that are neither supply of good or services are considered exempt, and hence ITC proportional to such sales cannot be claimed as per revised section 17.3.
Okay.
No ITC will be allowed if depreciation has been claimed on the tax component of a capital good purchased.
Okay, no ITC will be allowed if the depreciation has been claimed on the tax component of the capital goods purchase. So इसका क्या मतलब है?
Sir, so if where there is a registered person who has claimed depreciation on GST component of the cost of goods or capital and plant, so under the provision, the income tax, the input credit on the said GST amount shall not be allowed.
Definitely, because you have to claim depreciation only on the amount on the amount of the goods, okay, or the plant and machinery, and not on the GST. That you're going to take as an input credit, so it is not becoming your cost at all. So GST is not your cost. Okay, normally it will not be your cost if you are supplying goods 100% which are taxable. So your output supplies are fully taxable. So you're not going to take the input credit for claiming your depreciation. So that is basically a pass-through expense for you. So, but in case if you are used, you have claimed depreciation on the tax itself, then ITC will not be allowed. So it is what he's saying. No ITC will be allowed if depreciation has been claimed on the tax component of the capital goods, because the tax component is not your cost normally, okay, unless it becomes your cost. If because you are totally exempted from GST because all your goods are exempt. So in that case, it becomes your cost. So you can claim depreciation, but not otherwise. Okay. Is that clear?
Yes, sir.
Okay, go ahead, please.
The next slide is about the reversal of ITC. So, under certain circumstances, the ITC income tax credit is reversed back. ITC can be availed only on goods and services for business purposes. If they are used for non-business purposes or for making exempt supplies, ITC cannot be claimed. Apart from this, there are certain other situations where ITC will be reversed. Firstly is the non-payment of invoice in 180 days, which we discussed earlier as well, about the bill to be provided within 180 days. If the invoice is not paid, then it will be reversed. Credit note issued by ISD by seller. If a credit note was issued by the seller to the HO, then the ITC subsequently reduced will be reversed.
Okay, fine,
Thirdly,
Kajal. I think we have actually crossed the time now. Pratisha is not there in the today, isn't it?
yes, sir.
तो ठीक है, आपका हो गया. कितने स्लाइड बची थी आपकी ओर?
सर बस एक
Uh,
yeah.
Just
but
show me that slide. Yeah. Just show me the slide.
it's just the conclusion slide.
Okay, fine. Just hold on. So we are not going to touch that. So just a final word.
Okay.
So what are your views about the subject, and did you gain something about this subject?